Welcome to the loan configurator section, and as we started this loan in the training, we knew that we had a first and a second, and that can end up making things a little bit more complicated. We also had a significant amount of debt, and we're not sure exactly how we're going to get this guy qualified and make sure that the debt to income ratio falls in line, but I'll go through this here. And once you put the information in on the current property, for example, there was a second, there was a third, will they subordinate? The answer is yes, they will. Well, that's great news. So we go over to the loan calculator. Now, for example, here is the debt that we were going to be paying off, about $42,882. There's not going to be a new second, so basically we're looking at a new first, paying off the first, and also the debt on the second. One of the things, once you start filling in this information, this calculates on the spot. It is so quick, you'll never have to pick up a calculator to figure this out. All right, and in this situation, we're at 2.625. On loan 2, we're actually going to do a side-by-side with the third not subordinating, so we'd actually end up paying it off. But I want to point out a couple of really, really important things here. The debt to income ratio, it's over 45%, closer to 46. That loan is in the gray area of whether or not it's going to close. So the situation is you're going to actually end up having to pay off debt. So we put this handy dandy debt button here. So now you can go back and actually figure out what you're going to pay off, what can be admitted, and what the new debt to income ratio is going to be. So if we go back over here to our Loan 1 configurator, our new debt to income ratio is 34.8. We're at 79.57% total loan to value. Okay, so in that situation, we are in exceptionally good shape for getting this loan approved. The one thing I'm going to show you here real quick is loan 2. Second will subordinate. Third will not. Debt to income ratio is still high, and we paid off a lot of debt on loan 2, because now you have an option. You can go through all different loans and figure out what you can pay off and what you can't pay off. All right, and at that point, we'll go back over here to loan 2 again, go to our loan calculator, and it shows you we're paying off the third right here, and also $42,000 worth of debt, and we have a new first trustee. So in this particular situation, and in loan 2, we know that this loan is going to go through. By the way, remember they did have investment properties. Okay, total reserves available, we're okay. If that were not, it would turn red on you and tell you, wait a minute, you got a problem. You got to figure out how to get more money in the bank in order to be able to qualify for this particular loan. So there's a number of things in here that will help you. And again, this is your view. If you'd like to show it with the borrower as you're working through the loan, that kind of transparency, that type of working with the borrower, you would not believe the borrower experience, because this is all magic to them, except for us, it's 700 calculations and decision trees, and it's how we put a loan together. And I can tell you at this point, to try to do this on your own would take a long time with a calculator, a piece of paper, and a pencil, or an Excel spreadsheet. Thanks for stopping by.